All right, what's up, guys? Back at it with another video. I know it's been a really long time. I'm sorry for that, but just something to hopefully help out heading into the nice bullish environment that we currently have. Hopefully, this makes and or saves you guys a ton of money. How to place your stop loss appropriately in places where you won't get wicked out. You can still kind of ride the trend, and you are actually being rewarded from winning setups. So we're going to get into that. We're also going to introduce this concept that I call scaling assumptions. I have made a video on that before. I'll link that right here for you to go and watch. So basically, I want to get the concept across, and then after the fact, I will pertain it back to my system and show you actual examples on this is the SUI chart on the 30-minute, which is something that I actually have been trading for the past couple of weeks or so. So the three Asians is what I call them: justification, expectation, invalidation. If we focus on these three, we can forget about the fourth one, which is liquidation, right? So you really just want to focus on these. Now, I understand that it's kind of weird and kiddish, but all of my content is, right? We're trying to find a way to justify something, right? And that something is either up or down or maybe sideways, right? Mean reversion, range trades, whatever, right? So you have an expectation. You expect up, you expect down, you expect sideways. How are you able to justify that? And don't get too carried away. Let's hold off on this one right now. If you just focus on these two, what you're often going to find is that your justification for why you're in a trade is also the exact same reason as to why you would exit the trade. So for my particular system, I use moving averages, market structure, and gray boxes to portray support and resistance. Right now, that means that if I'm able to justify taking a setup on SUI, which this is a real setup that I did actually take, buying the 30-minute 200s local trend portrayal because of frequent tests on the most recent downtrend, able to justify buying 30-minute 200s. We have demand zone as confluence, and I'm using market structure as support to that kind of thesis, right? And I'm allowed to anticipate up. Now, for all of these examples that I'm going to give you, SUI specifically is threatening price discovery, and here it is currently in price discovery, right? So we're just going to call it, just for educational purposes, every single take profit is two, right? $2. So this would be an actual setup that I'm able to use for SUI. And I'm justifying the idea of further upside by market structure, moving averages, and gray boxes, right? Support and resistance. So those three things are moving in tandem. So this is a valid SUI trade per my system, right? Now, technically, this is my market structure interpretation. You could argue that my market structure needs to be this low, right? The caveat with that is that you've now killed your RR, your reward on that trade. So what I do is I scale my assumptions and I say, hey, if we're gonna break this little mini micro market structure along with the 30-minute 200s, along with the demand zone, then I can pretty much call it quits on that setup because I'm mostly invalid because all three of the reasons that I've entered the trade in the first place are now flipped for the most part, right? Now, technically, it would be this market structure. I'm scaling my assumptions to use this market structure in tandem with the other two parts of my very complex three-part system, right? That was sarcasm. In order to justify the trade, in order to actually be able to tell my gut, why am I in this SUI setup, right? And same exact thing next time around. So this next setup, which is the exact same thesis, because it's still just as valid as it was the first time around, because all three of my justifications continue to be true, right? We're still uptrending in terms of market structure. We're still using gray boxes as support and flipping them as support, right? Breaking out above them as resistance, flipping them as support. And we're still trending along the 30-minute 200s beautifully. So when we get this kind of a retest, I'm able to justify taking the exact same setup, literally copy paste the exact same setup. Now, again, technically, where do all three parts, right? And let's continue to target $2. Technically, where do all three parts of my system, they're no longer justifiable? Where is it that market structure is broken, we've lost 30-minute 200s, and we've lost the gray box and demand zone? I already showed you the answer right here. right? That's when all three things happen. Now, this setup, if you're going to take this setup, it's a lot more arbitrary. The stop loss is a lot more arbitrary because there's no mini microstructure for us to hide our stop loss below, right? There's that. This little tiny move is what you want to hide your stop below. It's not the greatest take in the world, right? You have to understand that if you are going to be speculative and quote unquote scale your assumptions, it just makes sense for the probabilities to get skewed out of your favor, at least to the slightest degree. So you are saving a lot in terms of risk reward. You can quite literally double up your RR just by kind of neglecting that third part of your system, but you know in your brain what you're doing. You know that this is technically supposed to be the market structure that you hide your stop loss below, because that is the place where all parts of your system that you're able to justify being in that setup in the first place are no longer valid, right? So again, here's the exact same example where it didn't work. It does not work here. My scaling assumptions, had I been the actually technically right kind of guy, only taking textbook setups, even though the 30-minute 200s break here, and so does my demand zone, we never break structure. And so I would have actually been better off not touching that trade at all, right? In hindsight. Now, again, there's pros and cons with this because if I don't scale my assumptions and I wait for a pullback into here to actually, right, break the structure, actually, technically, that guy, right? If I wait for that, then I've now given up a lot of potential RR on this trade, but I've also kind of seceded a lot of the price action, right? I'm giving so much back to this market, so you can see that this trade in itself is only a 2.5R trade, assuming that we're just going to continue targeting, right? Let's just pretend there's a big bulky resistance here on the weekly or on the daily. We have to keep in the back of our minds, this is only a 2.5R trade. In all honesty, I probably don't even take that trade. It's not appealing enough to me. So instead, what I did is I hid my stop below that 30-minute 200 moving averages along with that market structure. So let's say I had my stop right below this structure. I'm scaling my assumptions. Hey, you know what? If we break this mini market structure, then we're going to go on to break this one too. Clearly, that's not what happened, right? So instead, what ends up happening where I'm stopped out and I'm now looking for higher time frame trend retests. So just imagine, because it's too much work for me to flip to a different time frame. 4-hour 200s are doing something along these lines, right? Actually, I think they got front ran just slightly on that recent test. 4-hour 200s are absolutely key, beautiful high time frame trend portrayal. So all of these bottoms that you're seeing on a much higher time frame, we're finding those bottoms along 4-hour 200s. So when we break those 30-minute 200s, that local trend, we stop me out because I'm trying to get cute with the market and scale my assumptions. I do get wicked out of my trade. I get to target the higher time frame trend, therefore, right? Now, I understand that I got stopped out in the trade, but even if the trade worked, I would only be up 2R. Now, check this out, where I get stopped out on the setup and I am able to justify setting bids all the way down here, which clearly they get front ran. We reclaim that trend all over again, and I get to apply the exact same concepts of which I applied that worked several times on the way up. I get to apply them all over again on the next leg upwards. So I missed this first move because I do actually know somebody who was able to buy 30-minute 200s trend reclaim here. They hid stop below structure. Technically, their stop loss is supposed to be here. They got cute. They did not get wicked out. And the market was very kind to them and decided to V reverse and right their interpretation, all parts of their system, all three parts, because they copy trade me, or at least copied my system, right? Point blank. But other than that, all three parts of their system were still valid, right? Even though those 30-minute 200s were clearly trading below them, and we don't have any kind of local demand zone. Maybe that demand is like right here, right? So we're maybe at it or just a little bit below it. The time where I was able to hop back in on the SUI trend was this, the 30-minute 200s retest over here, right? I'm able to set bids after we break out. We test this region as resistance. We smack our face on resistance and pull back. Nothing crazy, right? No reason for me to start, being a mega bear. But we do smack our face in resistance. That means that resistance did the bare minimum. I'm still a trend trader, so I'm still looking at these 30-minute 200s and saying these are all higher lows, right? We're probably going to continue heading to the top right corner. And so when we retest those 30-minute 200s and I'm hiding my stop below this previous structure, actually technically exactly where it's supposed to be, right? I'm not scaling assumptions at that point. I get to take just a very simplistic kind of trade, and it looks a little bit like this, right? I get to hide my stop below previous low. It's only 5% away. And even if I'm still only targeting $2, that's a nice 5R trade, right? That means that I'd be currently up 4R unrealized at the moment. That's a really solid setup. The idea is the same reasonings as to why you're able to justify your trade in the first place. Unless those reasonings are fully washed away, there's not really much of a reason to call your trade invalid, right? So you want to at least have the understanding of what is the technical textbook setup supposed to be. You can apply this with any kind of system, right? If you trade Ichimoku or Elliott Wave or whatever it may be, I don't care. But whatever you're trading, you have to know here's why I'm justifying my setup, my expectation, up, down, sideways, and here's what invalidates that. And it tends to just be the same reasonings for why you entered in the first place, but just inverse, right? If we're below 30-minute 200s, we're downtrending on structure and we're losing key levels, my gray boxes, right? Why am I going to take a long? And the answer is I wouldn't, right? I would zoom out because this is context. Right? And the context would be, hey, even though we lost 30-minute 200s and we're downtrending and this looks pretty ugly in the short term, we're still uptrending in the high time frame, right? So I can then apply that context and then look to apply the exact same philosophy, the exact same concepts all over again, but now at a high time frame setup, right? So instead, if we broke 30-minute 200s, we lost key structure, right? We broke that structure, we lost that demand zone, then suddenly I'm allowed to start implementing the exact same thesis, but just on this time frame instead. So I'll try and buy the 4-hour 200s along with this demand zone, or maybe that demand zone, depending on where they are at that time. And I can hide my stop below this market structure, right? And suddenly I have the exact same thesis. I'm not, overthinking things. I'm not hurting myself because I'm thinking so hard. It's very simple. It's very, straightforward. I get to imply the exact same concepts and the exact same system all over again, but just changing time frames. And it's still just justification, expectation, and validation. In this case, rather than 30-minute 200s in an hourly market structure and an hourly gray box and demand zone, instead I'd be using 4-hour 200s and a daily structure, right? Because these are legs up on the daily. That's a leg, higher low on the daily, higher high, higher low on the daily. This is a higher high on the daily. If you don't know what I mean, when you go out to the daily chart, you can't really see much of the price action in between. This is all one leg upwards. That's one leg downwards. It's one leg upwards. That's the only leg downwards you see in this entire kind of pullback, right? And then we have one leg upwards. So I can look for that next higher low in terms of structure along my 4-hour 200s with confluence of support. And it's still just justification, expectation. And then only if we break daily structure, we lose 4-hour 200s, and we lose daily demand zones, then is my trade invalid. So I know that the scaling assumptions part of that is very difficult and complex to understand. It does kind of go a bit more in depth. I do have a video on it. I haven't watched that video in a long time, so I'm not sure how well it covers that concept, but I should probably make another one. I'm also thinking about making a video talking about my philosophy for when something is in price discovery and I'm actually in that coin. So how I'm taking profit and how I'm justifying, scaling out of that position. So if you guys are interested in that, you know what? Let's do some cringe YouTube influencer bullshit, right? If you guys want me to make a price discovery taking profit video, get 100 likes on this video and I'll do it. Don't go just yet. Don't exit off the video. I have something important to tell you. I do have a free Discord, guys. If you want to come hang out in my Discord, I post daily market updates in there, just covering my thoughts on mostly BTC, but sometimes the broader market as well. And for those of you who want to follow me a lot more closely, you can use my Bybit and or my Femex referral link and then start trading on that account. And then that'll get you access to my private Discord. And in that private Discord, we host live streams 3 times a week. I show you my concepts and on trades in the real market in real time. Go through a Friday altcoins watch list every single Friday. Look for the top outperforming coins heading into the next week, and it's just an amazing community in there. So very, very valuable, and I would hope that you guys do your best to try and join me in there. So thank you so much. Appreciate you watching. Much love. Take it easy.